Good afternoon, ladies and gentlemen, and warm welcome to the event on IRDAI Roadshow, Meeting with Japanese Investors Today. 本日は IRDAI ロードショーにご参加いただきまして誠にありがとうございます。Before we start today's event, we would like to show you two videos. First video is about Chandrayaan-3 landing on the moon on August 2023. Second video is about G20 summit held in India from 9th to 10th September 2023. イベントを始める前に映像を2つ上映させていただきたいと思います。1つ目はインドの月面探査機チャンドラヤーン3号が8月に月面着陸した際の映像です。2つ目は9月9日から10日にインドで開催されました G20 サミットの映像です。どうぞスクリーンをご覧くださいませ。
This point are providing confirmation of the safety of the landing site.
As expected, the retargeting is going on, and this is a very good signature for the lander. अभी आप ये देख सकते हैं कि लैंडर की ऊंचाई लगभग 65 मीटर के आसपास बची हुई है.
Currently, only 2 engines are now being fired, and we are nearly at zero velocity, vertical and horizontal. We were hovering, and now we are approaching the moon's surface.
धीरे धीरे लैंडर की वेगमान को कम किया जा रहा है और हम अब लगभग 50 मीटर से भी कम आ चुके हैं.
We can see the Honorable Prime Minister, Shri Narendra Modi ji, who is here to encourage us, and he is critically looking at the visuals.
जी हाँ, आप अपनी स्क्रीन पे देख सकते हैं कि हम लैंडर मॉड्यूल.
People are applauding. Let us all wait to hear from the Secretary Department of Space and Chairman ISRO, Shri S. Somnath.
लैंडर मॉड्यूल पूरी तरह से सेफली और सॉफ्टली चंद्रमा के सतह पे लैंड हो चुका है. ये हम लोगों के लिए बहुत ही गर्व की बात है. हिंदी में एक कहावत है,
Your Highnesses, Excellencies, G20 के प्रेसिडेंट के तौर पर भारत आप सभी का हार्दिक स्वागत करता है. भारत की G20 प्रेसिडेंसी देश के भीतर और देश के बाहर इंक्लूजन का, सबका साथ का प्रतीक बन गई है. आप सबकी सहमति से मैं अफ्रीकन यूनियन के अध्यक्ष को G20 के स्थायी सदस्य के रूप में अपना स्थान ग्रहण करने के लिए आमंत्रित करता हूं. नई दिल्ली G20 लीडर्स समिट डिक्लेरेशन पर सहमति बनी है. संपूर्ण विश्व में आशा और शांति का संचार हो। 140 करोड़ भारतीयों की इसी मंगल कामना के साथ आप सभी का बहुत बहुत धन्यवाद।
To begin today's event, may I invite His Excellency Mr. Shibi George, Ambassador of India to Japan, to make opening remarks. はじめに、駐日インド大使館、シビ・ジョージ閣下より開会ご挨拶をいただきます。First, I would like to invite Mr. Randeep, Director, IRDAI, to make welcome address. はじめにインド保険規制開発局エグゼクティブダイレクターランディープ・シン様より歓迎のご挨拶を申し上げます。
Respected Chairman IRDA, Mr. Debashish Panda, respected Chairman IFSCA, Mr. K. Rajaraman, His Excellency Mr. Sibi George, Ambassador of India to Japan, distinguished CEOs of Indo-Japan joint venture insurance companies, esteemed participants from the Japanese investor community, officials of the Indian High Commission, and my dear friends. It gives me great pleasure to welcome you all to the Japanese Investors Meet in Tokyo, Japan. The purpose of the meeting is to share with you the initiatives that have been taken in the insurance sector under the chairmanship of Mr. Debashish Panda. As you're all aware, the reforms are all-encompassing, touching on every aspect of insurance business and across the entire value chain of the insurance sector. Ever since he has taken over as chairman IRDA, he has set a scorching pace of reforms. He has followed it up with various steps for ease of doing business, reducing compliance burden, focusing on increasing use of technology, giving importance to data-driven decision-making, innovation, and research. The list is very long, and it will be fascinating to listen to him when he lays down his vision of insurance for all by 2047. Therefore, without wasting any more time, I would request His Excellency Mr. Sibi George, Ambassador of Government of India to Japan, to share his thoughts before I call upon Chairman IRDA to share his vision. Thank you so much, sir, and welcome to this meeting. Thank you.
Now, may I invite His Excellency Mr. Shibi George, Ambassador of India to Japan, to make opening remarks. 続きまして、駐日インド大使、シビ・ジョージ閣下より開会ご挨拶をいただきます。
Chairman IRDAI, Shri Debashish Panda, Chairman IFSCA, Shri K. Rajaraman, CEOs of insurance companies who have joined here, Japanese investors who are participating today in the meeting, friends, ladies and gentlemen. Good afternoon to each one of you. We look forward to a presentation on the transformation which has happened in the insurance sector in India during this meeting. In fact, in the last few decades, we have seen how India has transformed. I had the occasion to interact with a lot of friends from Japan who visited India as part of the G20 meetings. In fact, in India, we had something like 220 meetings during the last 1 year when the whole nation participated in the G20 meetings. And these meetings were held in 60 cities all across the country. Each one of them who came back to Japan after visiting India has told me what they witnessed in India is a new India. Every part of the country. There is significant progress in infrastructure. There is significant progress in intercity connectivity. But the most important thing was the digital transformation. This is a new India. Every sector has changed. Every sector has made progress. And I'm very happy to note that the insurance sector has also made significant progress. In the morning, I was with the governor of the Reserve Bank of India, who was addressing the Japanese business community on the India's economy, the transformation of India's economy. I was so happy to hear when he listed out the achievements we have made in the last few years. Despite the challenges of the COVID, India continued to maintain its growth rate. And now we are set to grow at 6.5% confirmed this year. The importance of cumulative growth is very, very important in a country like India. The Prime Minister of India has given a vision of Atma Nirbhar Bharat and Amrit Kal. What is Amrit Kal? Amrit Kal is the next 25 years of India's journey to become, when it becomes a 100-year-old country after its independence. What he visualized is a developed economy. And for that process, we need to have this cumulative growth, the compound growth, which would make, imagine we grow at 6.5 or 7.5, the big difference between the two. 7.5 and 9.5, it's a huge difference. So, but we need to maintain that growth rate in India to become a developed country. In that transformation journey of India, we have a reliable partner. And that reliable partner is Japan. In India's transformational journey over the last 50 years, Japan has always been a partner. Let me give you 3 small examples. One, the automobile industry. Suzuki came to India almost 40 years back. It transformed India's automobile industry. We all proud to use the Ambassador car. I was proud that it was my namesake. But not Ambassador car is not the most sought after car in India anymore. It is the Maruti car. It is the Suzuki car which came and then transformed the Indian automobile sector. Then came the metros, the Delhi metro. I was in Delhi. I was in fact the desk officer for Japan in the Ministry of External Affairs when that discussions happened 20 years back. It changed India's mass mobility, the way we look at it. Now we are working on a very important element, and that is the Shinkansen. The Shinkansen, the bullet train, we work towards achieving the target of by 2027, the first bullet train will be in connect Ahmedabad with Mumbai. So this is the transformation Japan was involved in India's economy and various sectors. And the same thing we will witness in coming years and decades when we, India, transforms into a fully developed economy. So I look forward to the presentation by the chairman on the transformation that has happened in the insurance sector. I hear a lot of complaints about, from many Japanese companies saying that, there is a process is delayed. Sometimes there is no Japanese food available in that city, or there are no Japanese schools available. But one complaint I have never heard, that we haven't made money. Each Japanese company who came to India, invested and stayed there has made money, and they are very happy that they are growing fast. Each one want to expand in India. So welcome. Look forward to hearing you from you, Chairman, and I welcome each one of you for today's session. Thank you.
Thank you, sir. So I would like to request Mr. Randeep Singh, Executive Director, IRDAI.
Thank you. Thank you, Your Excellency, Mr. C.B. George, for sharing your thoughts, your insights, and how India and Japan can collaborate and grow together. Before I request Chairman IRDA, I would request Mr. Rajaraman to share his thoughts before we actually go to the highlight of today's program, where Chairman IRDA would be talking about the reforms in the insurance sector. But because Mr. Rajaraman has some prior engagements, I would request him to come to the dais and share his thoughts. Thank you, sir.
So, first of all, a very, very warm welcome to all of you this afternoon. I would like to first of all thank Mr. Panda, Chairman of IRDA, for this organizing this event, and also to Mr. C.B. George, Ambassador, for hosting the event in the embassy. So, my presentation here would be to tell you a little bit about what the International Financial Services Center is all about. This is an experiment which just commenced several years ago, and it is still in the making. Made a lot of progress, and there is a great opportunity for that in the insurance sector. So I thought that let me share some thoughts with you. Next, please. Yeah. So India is as the ambassador just mentioned, it's a vibrant democracy. It is a bright spot in what you call as a VUCA world, a volatile, uncertain world. Today, it hosts very strong institutions, be it the parliament, media, or judiciary, or financial sector institutions like the Reserve Bank, Stock Exchange Board of India, or IRDA for that matter. So all of them have provided stability, both political stability and financial stability. If you look at the capital and flows and trade flows, I think this has been one of the very big hallmarks of the Indian economical growth. The first is we have touched a record $776 billion, and the Commerce Ministers announced we will touch $1 trillion by 2025. So I think exports are really growing fast. We also have a very strong foreign investor interest, in the form of FDI. So FDI continues to flow, and foreign portfolio investments are also strong and robust, despite a lot of global uncertainty and volatility. The forex reserves are about $586 billion, and this is something which is very remarkable. We are the 5th largest economy. We expect to be the 3rd largest economy by 2027. And the last and foremost is that we are a young population. 65% of the population is below 35 years. And many of them are getting skilled very rapidly, and in some of the very important sectors, including STEM. Next, please. If you look at the report by Swiss Re, we find that over the next decade, I think India will be one of the brightest and hottest spots of growth in the whole planet, amongst the significant economies in the world. So we hope to grow at around 6.7% over the next decade. Next, please. If you look at the insurance market, because that is a topic of today's discussion, I think we hope to become the 6th largest market by 2032. This is also a very important area which I think of interest to you. Next. So if you look at the reforms that have been done in the last 9 years, I think there are many reforms that have been done, both in the social sector, the economic sectors, and many other sectors. But I think what interests you is the business reforms. The first is the tax reforms. In the midst of COVID, government cut the corporate tax to about 22%. And despite that, our corporate tax collection has actually grown by 66% in the last 7 years. So this shows that lower tax necessarily doesn't mean lower tax collection. Personal income tax has grown by a record 160% in the last 7 years. If you look at this year, I think 78 million people filed their income tax returns, which is something very, very significant for us. Province-wise, value-added tax have been replaced by one single consumption tax across the country, enabling very efficient logistics and business activities in the country. The financial sector reforms, of which Mr. Panda was also an architect, I think, during his time as Secretary of Financial Services, he ran some of this. We have a very strong, very important reform called the Insolvency and Bankruptcy Code, which enables speedy exits of companies which are caught in insolvency. So this has enabled a very healthy banks, I think Mr. Panda perhaps will certainly talk more. This has led to healthy public sector banks, and as a result of which there is a positive outlook on the economic sectors. And finally, I think financial inclusion based on the India Stack, I think, which includes 500 million bank accounts for people who never had bank accounts since independence. I think this has been possible because 1.3 billion people have got Aadhaar, which is their biometric IDs, and 1.2 billion people have got mobile phones. So this is called the India Stack, based on which we have a very strong payment system. People have been connected to the financial system, I think, because if you're not connected to the bank, I think then obviously how can you get credit? How can you get insurance? How can you pension yourself? So I think this very significant change has been possible because of the digital stack which India has built over the last 6-7 years. And finally, I think the ease of doing business reforms which has been done. The Prime Minister personally has been after old archaic laws which need to be completely either repealed or modified or amended in keeping with modern times. Many of our laws were written during the British times, and they all are continuously being replaced by simpler, easier, and business-friendly laws. Next, please. So there are so many things that the Honorable Prime Minister and the Government of India want to do for 2047, which the Ambassador referred to as Amrit Kal. And I think in the next 25 years, I think, one of the most important things that we believe that India needs to do is to grow its economy and grow its industrial sector. And for which the foremost requirement is, it requires a lot of capital, I think. So it requires a study by Dun & Bradstreet tells us that we require about $18 trillion by 2047. So about $4 to $5 trillion is required by the infrastructure sector, about $10 trillion for the net zero goals, which the Government of India has set for itself to become net zero by 2070 and energy independent by 2047. So all this requires a lot of capital. Next, please. So the thought process came about that we must actually open up the pipelines that lead foreign capital into India in different ways. So one of the pipelines is through an institution which the Government of India has envisioned called the International Financial Services Center. Money can also be invested directly into India, but there is also a requirement that many foreign investors do not feel comfortable in a domestic India where the regulations are still quite burdensome, but significantly lower as of now, because the domestic requirements are different compared to, say, a global requirement. So therefore, the government has created this small enclave, which provides a soft landing station for investors who want to operate in a global environment, a globally benchmarked environment. Next, please. So the International Financial Services Center has been formed, which is a unified regulator. It has been delegated with the powers of the Reserve Bank of India, the insurance regulator, IRDA, the pension regulator, and the Stock Exchange Board of India, all in one, into one regulator for the small piece of land which provides an offshore global platform. So it regulates all the financial institutions, products, and services within the territory or small territory which has been earmarked for the International Financial Services Center. Next, please. So this is located in the city of Gandhinagar. I think it's called GIFT City. It's about 20 minutes from the international airport, which is connected to Singapore, Doha, Dubai, London, and many other destinations. It is connected by a metro railway to the city of Ahmedabad and to the airport. And as the ambassador mentioned, I think the high-speed railway line or the Shinkansen will also connect Mumbai with the Ahmedabad by 2027, which will also probably enable easier transport. Next, please. So the Honorable Prime Minister's vision is that GIFT City is a very important gateway to connect India. So it's a financial gateway for India, is what his thought process is. And finally, it will also be it will play a very important role in innovative financial products and also act as a catalyst for India's growth. Next, please. So we have a dedicated financial sector regulator called IFSCA, of which I am the chairman, and there are some of my colleagues who are here. We have 11 currencies which are permitted to be traded in GIFT City, and I think you can exchange. They are freely tradable amongst each other. In domestic India, currencies are not tradable. The Indian rupee cannot be converted to foreign exchange on the capital account freely, except through an approval route. Whereas whereas it's freely convertible in the trade account. In GIFT City, I think we don't have any controls. I think the foreign currencies are freely convertible to another currency in both the capital account as well as in the trade account. We have a best-in-class regulations which are basically benchmarked to the global best practices in Singapore and other places. There are special carve-outs from domestic law. And we have an attractive tax regime which proposes exemptions, which I'll come to a little later. The main competitive edge that we have in GIFT City is that, for companies which are probably located but serving India from outside the country, is that we have you will be very close to the Indian market. I think that's very, very important. Being close to the market in the same time zone actually provides certain advantages. There is beneficial cost of operations both on the human resources side as well as on the real estate side. Maybe our costs of operation are much, much lesser than probably very important other centers like London or Hong Kong or Singapore for that matter. Next, please. So over the last 3 years, we have laid down all very important regulations. I think we have simplified the regulations, made them unified, and we have benchmarked ourselves to some of the best regulations in other jurisdictions. And we have regulations for insurance, for banking, for stock markets, as well as for intermediary operations, as well as for insurance and pension. We also have regulations for ship leasing, aircraft leasing, and many other kind of related activities. Next, please. There is no tax on business income for 10 years out of 15, any 15 years of your choice by any of the businesses which are authorized to operate in GIFT City. There is a minimum alternate tax only if you choose not to come into the new tax regime of 22%. And there is no commodity transaction tax, no security transaction tax. There is no GST. There is no stamp duty has been exempted. And also there is a reduced withholding tax of 9% on interest paid on debt instruments. Next, please. As far as the banking sector is concerned, there are about 25 banking institutions which have established the operations here. I think we have 10 foreign banks, including MUFG from Japan. A few other Japanese banks are likely to set up their operations shortly. The total assets under management is about $47 billion. And the trade is, the asset side is largely trade finance, which supports India's exports, and a lot of external commercial borrowing. Banks also do derivatives, which include, say, non-deliverable forwards, P-notes, and so on and so forth. Next, please. The capital market ecosystem consists of 2 exchanges, stock exchanges. I think there are 69 broker dealers, there are clearing corporations, custodians, depositories, and they currently do a turnover of about $67 billion largely on derivatives, which is basically the Nifty 50 derivatives, which is a derivative of 50 stocks in the Indian market. We are also likely to immediately allow listing of Indian companies on the stock exchange, on a foreign exchange denominated stocks by early next year. Next, please. We also have a fund management ecosystem. We have, as of now, licensed about 78 fund managers to run alternative investment funds. There are about 68 funds which are registered in GIFT City, and the total targeted corpus is about $19 billion, with nearly $2 billion already invested into India. Next, please. We also have allowed ship and aircraft leasing, both financial leases as well as aircraft leasing, what you call as operating lease. And India is a very large aircraft market. Between Air India and Indigo, they are likely to buy or lease about 1,500 aircraft, wide-bodied aircraft over the next 10 years. Every year, about 150 aircraft would get leased out. And currently, I think Air India is leasing out all its aircrafts through GIFT City. And currently, about 100 aircraft assets, either aircrafts or jet engines, are currently leased out of GIFT City. And there are 8 ship lessors who are registered out of GIFT City, and 2 ships have been leased out of GIFT City as of now, I think. So it's a growing business, which actually is closely related to the financial services industry. Next, please. Now, let me spend about 5 minutes on the insurance ecosystem. Next, please. So we have rewritten all the regulations which obtain in the domestic area in a much more simplified manner, which more fits the global ecosystem. I think we have about 13 regulations which cover a wide variety of things, including intermediary regulations, web aggregator regulations, solvency margin regulations, and so on and so forth. I wouldn't go into that. I think these are all available on our web portal. Next, please. So as of now, there are 6 reinsurers, insurance companies who are registered with us. They are basically branches of large insurance companies who are located in India. There are 21 intermediaries, which are basically broker dealers. Next, please. So if you look at these are some of the insurance companies and brokers who are currently registered with GIFT City. Next, please. So if you look at the who can apply for the International Financial Services Center, I think it could be an Indian insurer, it could be a foreign insurer or a reinsurer, it could be a branch office of either Lloyd's or another reinsurer, it could be a public company, an insurance cooperative, or a body corporate, a society of Lloyd's, or a managing general agent. So all these entities are eligible to apply to set up operations in GIFT City. Next, please. Now, as far as the regulatory enablers, which with reference to the domestic area, is that I think about which I think Mr. Panda will definitely tell in great detail. I think we allow solvency to be maintained at the parent, because if you have a parent in India or a parent in Japan, I think the solvency margins can be maintained in their respective parent jurisdictions. And we will go by what the parent regulator will direct you, I think, and we will probably be accessing reports from you to ensure that you comply with that. And we require an assigned capital of $1.4 million to start with, and to be maintained at the parent or head office. Principle-based approach for product design, filing, and pricing. Investment can be done in a global jurisdiction in foreign currency. That is allowed. Nothing. We need not necessarily invest into India. Risk can be assumed even without receipt of premium. I think this is some modifications we have done for the international marketplace. And a manpower requirement as of now to start with is a principal officer, an officer for underwriting risk, an officer in charge for finance and accounts. So these are some of the, we have the bare minimum requirement, because obviously to start with, I think you'll be operating it as a branch from either domestic location or an international location. Next, please. To look at the opportunities, I think we are focusing that if IFSCA should become a reinsurance hub. So I think that is what we look at, because reinsurance is really will grow as India grows, and I think it's a very important opportunity, and for many of you as well. I think we are looking at asset insurance, including ships, aircrafts, and maybe other kinds of assets which would get leased out of GIFT City. We're looking at trade insurance. I just mentioned, I think when India hopes to export about $1 trillion, then I think it requires a very large amount of export insurance, I think. So we believe that we have an opportunity to provide dollar-denominated or foreign denominated insurance products to exporters and to importers, perhaps. Then we also are looking at credit insurance, which is very, very important in a fast-growing market. And finally, I think very cutting-edge products, including, say, cyber risk insurance, climate insurance, and so on and so forth. Next, please. So there are some events we are organizing in the next future. I think some of you are from India, so I would welcome some of you to come and attend the Reinsurance Summit, which is being jointly organized by IRDA and by us. Honorable Finance Minister is likely to attend, is chairing the inaugural session. It will be held in November 30th at Taj, Mumbai. I think we also have an IFSCA event in GIFT City on December 9th called the Nerve Center for New Age Financial Services. It's on December 9th in the GIFT City Radisson Hotel. And finally, I think we have a Vibrant Gujarat Summit where the Prime Minister is likely to attend and inaugurate. All the ministers, the Finance Minister, the Commerce Minister, all of them are expected to be there. So we welcome you there also on January 10th and 12th, where a large number of financial sector entities are likely to participate. So with these few words, I thank you, and I thank the Chairman IRDA also for this opportunity, and the Ambassador as well. Thank you very much.
Thank you, sir, for giving us that insights about GIFT City. I think it was quite eye-opening. I think so. Now we come to the highlight of today's meeting, actually, and it's the the address by the Chairman IRDA. I would now request Sir Mr. Debashish Panda to share his vision and thoughts about the Indian insurance sector. A little background to Mr. Debashish Panda. He's an officer of the Indian Administrative Service of 1987 batch of Uttar Pradesh cadre. His home state is Odisha. He joined as Chairman IRDA in March 2022. Prior to joining IRDA, Mr. Panda served as Secretary, Department of Financial Services in the Ministry of Finance, Government of India. Welcome, sir, to the presentation, sir. Thank you, sir.
Ohayo gozaimasu. So, warm welcome to all of you. And our friend, Mr. C.B. George, the Ambassador of India here in Japan, and my very esteemed colleague, Rajaraman, Chairman of the IFSCA. Our CEOs who are representing the Japanese companies who are present in India. And of course, the deputy CEOs are also present here, and all our investor friends who have gathered here this afternoon to listen to us and make a decision about investing in India. The ambassador has already set the tone of Amrit Kal and how India's growth story. And to add that, I think Rajaraman, our colleague, has very clearly laid down the India's growth story and how it holds promise for the investors to come in India and invest, whether it is insurance or any other sector for that matter. I think most of my job has been made very easy, and maybe some of the slides could be a bit repetitive, but I'll just try to take you through the growth story a little forward and then come to the specifics of the insurance sector. And after I have made the presentations, we have some of the CEOs here to really validate that what is happening on the ground and how investments, are going to be the thing in the insurance sector, and how it holds a lot of promise in terms of the returns on the equity. Let me very broadly, if I have to summarize what is happening in the insurance sector, is that on the backdrop or on the background of a very strong economic growth in India, and with a very stable financial sector, be it the banking sector or the insurance sector or the markets, we are registering a growth of around 6.5% to 7%, and still even poised to grow even faster than before and become the third largest economy in the world. So that holds a lot of promise in terms of putting your money, and you're putting it in very, very safe economy. We have a very stable government, and we have also a very strong leader in the form of our Honorable Prime Minister, Mr. Modi, who believes in the basics of, whenever any business entity has to really survive, not alone survive, prosper, thrive, then ease of doing business is the central pillar, and also to reduce redundant, compliances that mostly regulators would seek or governments would seek. With these two basic pillars in place now, a lot of reforms have undergone in the past several years. And of course, the other major pillar on which the government is trying to push a lot of things is to build the digital public infrastructure. Today, we are home to 1/5 of the world's population. So imagine that 20% of the market lies in India. And particularly from the insurance point of view, you are going to deal with 1.4 billion people. Everybody needs insurance today. It cannot be denied that insurance is the basic necessity, or the vehicle or the tool for financial and social protection, be it in the form of life, or be it in the form of a personal accident cover, a health cover, property cover. And you would also agree that every business, whether it is a small business, a small shopkeeper or a grocer, to a big company like Toyota or any other company who manufacture cars, or aircraft manufacturer, whether it is Boeing or Airbus or whatever, all of them require insurance in some form or the other. And you would also appreciate that businesses, individual citizens, everybody will buy business. Then what happens? The economy also grows. A lot of money then again, which is collected from the policyholders, is invested in the markets. So the economy grows, the government benefits, the people benefit, and the investors benefit. The Indian insurance sector in the last 5 years has recorded a growth of almost cumulative average growth of more than 11%. In the last 2 years, we are witnessing a growth of around 17-18%. Barring a few public sector companies who are a little slow in the growth, if you look at the private sector growth, they are definitely registering a double-digit growth, and some of them are even growing beyond 25 to 30%. So the short point I'd like to make, that the growth is happening in India in the insurance sector, and even poised to grow even faster. I think Rajaraman showed a slide where the Swiss Re projections are that India will become the sixth largest market in the world in the next 4 to 5 years. So that again gives you a lot of hope, and also the comfort of coming and investing in India. So my friends, I would like to pitch for that India is the destination for the future, and also going forward, your returns on equity also will commensurate in terms of your expectations. The top 5 to 7 companies in India are all getting an equity on the return on their equity is somewhere close to around 14 to 15%. I think nowhere in the world you will get that kind of return on your equity. We are glad that we have several Japanese companies who have collaborated with Indian partners, and they are in operation. I would only expect, I have been meeting some of your global CEOs and other very senior representatives from whether it was Sompo. I have met Sompo, you have met Daiichi, and I'm going to meet the others also during the course of my stay here. And just to assure you that, look, the regulatory framework, the regulatory ecosystem has undergone a radical change in terms of, again, having regulations which are light touch regulations, which have moved away from a rule-based approach to a principle-based approach. And when I say a principle-based approach, it gives a lot of comfort and room for the management and for the board to make decisions in terms of their business plans and the continuity of their business plans. So with this, I'll just take you through a few slides. I will not make it very long. Mr. Rajaraman has already mentioned, we are the largest democracy in the world. We have diversity, we have demand. And, India is one market, but within that one market called India, you have multiple markets. So when I say multiple markets, you have different segments of the population, different income levels. Then you have different geographies within India. You have a long stretch of states which are along the coast. Their needs are different. If you go to the hills, the need of the population who reside in the hills, they have a different requirement of insurance. If you go to the northeastern part of India, their requirements are different. So within India, you have multiple markets catering to different segments of the population, different cultures, and the gender requirement. All of this gives you ample opportunity to get into this market. The penetration, as you all know, is we are yet to catch up with the rest of the world. In terms of life insurance, the penetration is around 3.2. We are hovering between 3.2, which perhaps may match with the global, but we want to go beyond that. And as per our vision and our commitment, we want that every household to begin with and every citizen should be adequately insured when it comes to life, property, health, and the personal accident or the casualty part. So we want every businesses to be protected with some form of insurance, and more importantly, the micro entrepreneurs, the small entrepreneurs. So this is the attempt. So in order to do that, what have we done over the years? Next one, please. So it's already been mentioned, we are the fastest growing economy. And the other plank on which we are working is the adoption of technology. Today, without technology and without digitization, you cannot reach out to your customers. You cannot underwrite a policy without the availability of proper information, financial information and other non-financial information also. You have to be data-driven to offer more and more personalized offerings. So in India, we have a huge fintech and insurtech ecosystem, which is growing and growing. Young entrepreneurs who are startups, they start this ecosystem and come up with end-to-end insurance solutions. Then the digital payments is now considered to be one of the best in the world, where real-time settlement of payments happen. And the platform which we have is known as the UPI, the Unified Payment Interface. And it has an international connect now with several countries. And going forward, I think we will connect with the entire world. Sitting anywhere you can transact, because there is an interoperability, and the payment and settlement happens instantaneously. We are second in the world as far as internet users, number of internet users are concerned, and we are the third largest startup ecosystem in the world. Next. After the pandemic, obviously, as you said, both my colleagues, we have really shot back. We have come back, and the growth momentum has been maintained. And we had in the past a problem of what we call the twin balance sheet. We had a bit of problem with the banking system in terms of their capital adequacy, in terms of their, the overhang of non-performing assets. And even the corporate also had a similar problem. But in the last 4 or 5 years, very concerted efforts to clean up the balance sheets. Today, the banks are strong and stable. The corporates are also strong and stable. So we are seeing a lot of capex happening both in the private, and also the government is giving a big push to public capex expenditure in creating infrastructure across the country. Next. So the growth momentum would see, you see, every year 1 trillion on average will get added, and this will continue for the next 14-15 years is what we expect. And therefore, by 28, as per several reports, India is expected to cross the 5 trillion mark, and therefore becoming the third largest in the world. Next. And you see, the other interesting feature, what is happening is the power or the growth is not being powered only by the major cities, which we call the metro cities, Bombay, Delhi, Chennai, Bangalore, Hyderabad. No, the growth is being fueled by the tier 2, tier 3, tier 4 cities. We are seeing an emergence of a new middle class who are now transiting, or the mobility, the upward mobility is happening. Now, this new middle class also has a lot of women who are entering into the workforce. So what does that mean? A lot of income is now growing at that class of people, and who are having the surplus and they want to invest in productive instruments, whether it is in the form of insurance with a saving component, or with an annuity component, or with a pension component. There are people who are interested to invest money in the markets. So the savings are getting channelized to more productive instrument, and that's where the insurance companies have got a major role to play and a major market to tap. If you look at some of these, 50% of the recognized startups are there in small cities. 50% of the digital wallet users, they are from the small cities. And 60% of the e-commerce sales happens. That's a very good sign, and that's where the insurance company should be enthused to enter into those markets. Next. So India is actually continuously upgrading to an online, cashless, connected, high productivity economy, which is being backed by the unique digital public infrastructure. And this digital public infrastructure is not coming up alone in the financial services space, but in all other sectors as well. For example, the health sector. The National Health Authority has built a platform where all the health-related claims can be processed, which is the National Health Exchange platform. So this is a major flagship program of the government, and it is trying to cover the poorest of the poor through a health insurance program. Next. So it is the only country in the world which is trying to build the population scale APIs. APIs are the automated program interface. So how do you connect one with the other? You have to have those unique set of APIs. So India is doing a tremendous job here, and open networks which are talking to each other. So it's not a platform, but these are protocols and networks talking to each other. So that gives the comfort of, digitally transforming the society, and India has embarked upon this. But however, the safeguard. So we have the three major stacks. The first one is the biometric identity. My friend has already explained, where every Indian today, almost every Indian even a child has a digital identity. It's a biometric identity, so that there may be a person with the same name, 20 persons may be there. But how do you know that you are referring to a person? He's the one. So the digital identity will establish that you are reaching out to the right person. The payment, interoperable, fast, cheap, allowing everyone. It has democratized and it has universalized. Then data. And data sharing is done purely on a consent-based architecture. Every system that is being built in India has an architecture which will be purely consent-based. You cannot take anybody's data without his or her consent. That is the uniqueness of our digital public infrastructure. Next one. So I think I've already explained this. We'll move to the next one. Yeah. So this UPI, just a case in point, in 2016 it started, and only 90,000 transactions happened in the month of July with a value of only $45,000. Next. Today we are sitting in 2023. Look at the number. You will be amazed, astounded by the numbers today. Almost 11 billion UPI transactions have happened in the month of September alone. And the total amount of money which was transacted was almost $190 million US. So this is the power of technology. This is the power of digitization. And I would like to tell our investor friends here that even in the insurance space, we are trying to create a UPI-like moment which will enable everyone to just plug and play with that system and sell their products and reach out to every Indian who need the insurance cover. Next. So this is broadly, we are just trying to emphasize the fact that how do you access information, or how do you access data again, as I said, through a consent-based architecture. So we have also created in India an account aggregator framework. You know what an account aggregator framework is? Basically the financial information which resides with the financial institutions. They come all together at one place. And that information can be shared with the financial information user. For example, I want to buy insurance. So my insurer wants to know what is my financial details as to what is my income, how much of credit I have obtained from the bank, how much of money I have put into the markets, so that they get the full financial profile of me. And that helps them in underwriting the policy in a manner which will be conducive to, or which will be priced in an appropriate manner. So the account aggregator framework is again another game changer which is happening. And again, as I said, the information is provided only with the consent of the individual. Next. So the Indian stack we have already discussed. So you have the BharatNet. Today, even the last mile, we have got 250,000 village panchayats. That's the smallest unit of government in the country. It's a village administration. So we have almost connected all the village panchayats, 250,000 with internet connection. So whatever technological intervention we make, we are able to reach out to every village today. So that's the beauty and that's the power of technology, which will help even for the growth of insurance and to reach to the last mile. Then the Jan Dhan account. Today we have got 1.4 billion bank accounts. The poorest of the poor didn't have a bank account. Why? Because they needed some balance to be put into that money, which was a prescription of the banks. Our Honorable Prime Minister in the year 2014 launched a program where he said that we will open bank accounts with a zero balance. And today I'm proud to say that more than 50 million 500 million Jan Dhan accounts have opened. And today the account balance is around 1,25,000 crores. So that will translate into a huge amount of money which have people started saving in their bank accounts. So what does that mean? A lot of people who are not in the formal banking system, they have now moved to a formal channel of saving their money or dealing through a bank. Next, we'll skip this one. Then, of course, the other major projects that the government of India has initiated is the PM Mudra Yojana. Again, these are small ticket loans which are provided to micro entrepreneurs. We should target these entrepreneurs for insurance again. So you know that they are already obtained a loan from the bank. So the customer is known, his KYC is known. All you need to do is design a product appropriate for the ticket size of loan that they have obtained, and you can sell your product. Here, friends, I'm only trying to emphasize that look at the opportunity of how you can use the bank assurance model to reach out and sell insurance as well. Similarly, a number of initiatives which have taken have actually fueled growth of the economy. Next, we'll skip this one, we'll go straight to. So now all of this has translated into, if you look at the BFSI, the Banking Financial Services Indicators, the assets under management of the insurance industry is now around $730 billion. That is the amount of money which has the assets which are being managed by the insurance company. The assets under management of the mutual funds has gone up to almost 480 billion. The bank credit stands at around 1600 billion. And the aggregate deposits around $2192 billion. So this is growing and growing, and it will grow even faster as we go forward. Next. So the growth potential here of the country, again, as I said, I'll repeat, because we have 1/5 of the world population, and we have one of the fastest growing e-commerce markets. We have got more than 60 million small, medium, and micro entrepreneurs. We have got Asia's third largest destination for biotech, the third largest domestic aviation market, and the third largest automobile market, which is growing at around 10 to 15%. Next. A large workforce, which is, we are actually reaping the benefit of the demographic dividend also is coming to us, because we have a young population and will continue to remain young for the next several years. So how do we encash that as well? And the median age of working population is less than 29 years. So that's also another big factor to fuel the growth of the Indian economy. Next. So we have a huge market, we have human capital, we have an enabling infrastructure, and this infrastructure is even growing and becoming better and better, and we have the last mile connectivity. So based on this, the robust and stable economic environment, the potential for the insurance sector even becomes more attractive. Next. So many of the CXOs across the world have talked about that it is not only India's decade, but it is India's century. Somebody is saying India is a shining star. And the Citigroup chief says the superpower potential. And, somebody is saying it's a bright spot. So there is a tremendous global optimism towards India. And I'm sure you guys would be also witnessing this when you read the newspapers or you look at the television. So, we are not complacent. We know that we have to be on our toes all the time. We are trying to put the financial systems at all times that they are stable, do the risk assessment, do the risk profiling, and take care that and we have a very close coordination, whether it is the banking or the market regulator or whether it is the insurance regulator. Next. So therefore the opportunity today is profound as far as the insurance sector is concerned. I need not reiterate that. Next. So India insurance market is the 10th largest in the world and is poised to become the 6th largest. So this is the penetration level, the density level. Both are low as far as we are concerned. We want this to grow and grow very fast so that 2047, when our democracy turns 100, we need to have the entire society to be fully insured. And it is not an impossible task. It is a doable task. Now, in order to do that, what all has been done is what I wanted to communicate. Next. So today, if you look at the total ecosystem, there are about 70 insurers in operation in India. There are life players, non-life players, and also reinsurers, providing around 6.3 million people are directly and indirectly employed. We have around close to 6 million distribution points, the touch points, and we have got 4 research and academic institutions to support the industry for growth and development. Next. The premium income is somewhere around $125 billion, and the APE equivalent is around $98 billion. Those who are from the life space, they would understand the terminology. The growth rate 5-year CAGR is around 11%. FY 2023 recorded around 14% growth. And the return on equity, as I said, the top 15 private insurers, it ranges somewhere between 11 to 20%, depending on their age. The ones who are more aged, they are earning more. Those who are a little younger, they are gradually trying to catch up with the rest. And the AUM, as I've already mentioned, it is around $730 billion. This is the financial profile of the insurance sector. Next. So what is favoring the growth? The demographic dividend, the millennials and the digital orientation, wide middle class and the rise in the disposable income, and the shift in the demand patterns. More and more people are going for discretionary spends, and these are being channelized into insurance as well. Next. So the vision is insurance for all, every citizen, every business, every household. So what do we require? We have an aspirational growth target, more players, we require more coverage, we require more underwriting expertise, and we require more capital. Without capital, as you all know, insurance is a very capital intensive business. We need more capital to flow into the sector. Next. So the road ahead, we are, as I said, a data driven with a lot of insights which will come from the data. We want to be more progressive so that we are in sync with the market dynamics. We want to be facilitative and hand-holding. So any entrepreneur or any existing or a prospective entrepreneur, we do the hand-holding so that we can facilitate. So our approach is facilitative, supportive, so that we can ensure growth, and forward-looking. And that's how we are envisioning that before 2047, we'll have insurance for all. Next. So returns on investment, ease of doing business, leveraging data and technology, enabling environment, and ultimately, of policyholder will be at the core, and we have to protect the interests of the policyholders at all points of time. So this is creating a new landscape for the Indian insurance sector. And I'll go to the next slide, which talks about the key initiatives and interventions that have been made. So the entry of a new operator, like here, some of you whom I'm talking to, my target audience are the prospects who want to come into India and establish an insurance company. So what is it that you will look at? So we have looked at the entry guidelines or the regulations. So we have made it a very, very simplified and a seamless process of the moment you file an application, you can go to the website, look at the FAQs as to how you have to structure the capital and what is required before you can actually file an application. You first need an NOC to register a company. So the no objection certificate. That will automatically get generated after you fill up certain information. You can register the company with the registrar of companies once the company is registered, which is again an online process. So then you come to the regulator to file your application. The set of FAQs will tell you what exactly is required. Once you file the application, a facilitation cell will spring up. 2 officers from the IRDA will be in touch with you, and they will be continuously engaging with you to understand if you are finding any difficulty in filling up the requirement of filing the application, or if you have any query or if you have any doubt, then they will be in touch with you to give those clarifications. The turnaround time for the processing of a new application, for us, we have specified a time of 60 days, provided the proponent is able to furnish all the information. Then we do the due diligence of looking at the fit and proper criteria. We have opened up the space for all kind of investments. Say, for example, you come with 74% equity. So for another 26%, you can partner with a private equity fund, you can partner with a venture capital fund, you can partner with an individual or an entity here in India, or you can partner with a family office fund. So all of this is possible. However, we have defined a lock-in period so that the money stays and it doesn't fly out the next day or within 6 months, because insurance sector, as you all know, the money has to stay for a while. Only then, with the aging of the company, the lock-in period reduces. But all forms of entities are now being allowed to come and invest into the Indian insurance industry. And that's where, for you to find a partner for the 26% shouldn't be difficult. Next. So the other, just go back. So also what we have done, I don't know whether Japan it is prevalent or not, but I understand even the US today, if you have to launch a new product where you want to innovate or come up with a new feature, you have to go to the regulator for an approval. I don't know what exists in Japan, but in India, we have gone from the file and use regime to a use and file. For all life health product, for all non-life and health products, 100% use and file is the regime today, which is prevalent. For life insurance products, barring 1 or 2 products like coverages like annuity savings, rest of them have been completely delegated to the boards of the insurance companies to launch their products. So we want more choice to the policyholders. We want you to design products catering to different requirements, different geographies, and we want more and more innovation. And we want the market forces to apply so that the pricing of the products also come down, so that insurance becomes more affordable at the end of the day. And the other thing which has been done is a lot of unnecessary approvals, which were private approvals, which were required from the authority, has been done away with. And about 167 circulars have been repealed. More than 80 returns have been rationalized, and all redundant approvals have been removed. Another important feature that we have built into our regulation is something called a sunset clause. So regulations once made, it remained in vogue for 10, 15, 20, nobody looked at it. Now we have put a sunset clause that at the end of 3 years, automatically the regulation will lapse. Unless and otherwise you take it again to the authority with or without amendments and get it approved. So in other words, the authority will be forced to carry out a review 6 months prior to the expiry of the 3-year period. And when you review it, then you try to make those changes which will be in sync with the market dynamics or the industry requirements. So this is another significant change that has been brought into the system. Next. Now, the other important issue which companies have been raising is about the expenses of management. We all know that the cost of insurance, a big chunk goes to the expenses of management, plus the cost of the risk that you are carrying. So the expenses, and ultimately both the expenses are being borne by the customer. Now, expenses of management, there were some companies which they would spend any amount of money, in terms of commission and paying to their employees and other miscellaneous expenditure. So there were caps which were determined by the authority that for the commission you cannot pay X amount of money, or you have to be within a range. So that would not give the flexibility to the insurance companies to plan their businesses and also plan their future growth. So based on the demand from the industry, we had gone through a series of consultations, including public consultations. And finally today, what we have done, I think many of the jurisdictions are looking at what India has done, is that we have placed limits at the company level rather than at different sectoral level. So that gives a lot of scope, flexibility, and freedom for the insurance companies to plan their businesses, to determine the long-term plans also as to how they will determine the commissions, how they will determine what expenses they need to make, and a future planning or a future roadmap can be, decisions can be taken by the boards of those companies. Similarly, this has been one major shift, and I think many jurisdictions across the world are still not moved into this regime. And but in India, we have carried out this change. And our CEOs are there. When you will question them, they will tell you how exactly it is unfolding. Next one, please. Then, say, for example, other than equity, if a company wants to raise capital by way of debt for growth capital. So this is also now allowed, and the limits have been enhanced. And also they have been further, they can, no prior approval is required as of now. If their solvencies are as per the regulatory requirement, then they can straight away go to the market, either buy or sell the debt, which they will do it through the bonds. So this is an additional, delegation that has been made to the boards of the companies. So they will be able to raise capital as and when they require, depending on the. Now, from the rule-based to the principle-based regulatory architecture, we are also carrying out another comprehensive review, because even today, we have got around 50 odd regulations. We want to reduce it to a maximum of, say, about 10 to 15 regulations, so that it becomes easy for the existing players to operate, and also for a new player to understand what are the regulations which he or she is expected to comply with, and that will make life much more easier. So that comprehensive review exercise is in the process, in the pipeline, and we expect in the next 2 to 3 months, this entire exercise will be over. So in other words, our first phase of reforms 1.0 will be completed before the close of the financial year, that is 31st March 2024. Next. Then another move which has been made by the regulator is to request the government also to bring about certain changes in the statute. The statute is as old as 1938, and a lot of things have happened in between. So primarily this changes would look at facilitating new and small entities. So once we make this change, smaller entities, regional players, small players, niche players, specialized players, all of this will be will get an entry into the insurance space, because the current requirement has been hard-coded in the statute. So therefore, we don't have the flexibility to allow a smaller player to come in and operate in the ecosystem. The other big demand from the industry is also to allow value-added services. Say, for example, with health, if wellness is also allowed, a club membership, of health club membership, or a membership of a gym, or a membership of a yoga club. So health and wellness go together. So that is also not permissible in the current statute. So that is also one of the proposed amendments. And a series of other changes have also been proposed, which will, I think, make it more attractive for the investors to get into the insurance sector. Next. Then, while we are doing all of this, the question would be, if you have more players, you have opening up the system, you are delegating a lot of responsibility to the boards of the company. Now, how do you take care of the risk aspect? How do you manage the risk? How do you assess the risk profile of the company? So in order to become future ready, we are now working on 3 mission mode programs. The first and foremost, I would say, is to move from the current financial reporting system to the align ourselves with the international reporting system, IFRS, and we hope to start this by 2025. Similarly, we are also moving away from the solvency, the factor-based solvency regime, to a risk-based capital regime. And you all understand that a risk-based capital regime would entail more efficient utilization of the capital. You would know exactly how you plan your business, which line of business. Accordingly, you will allocate capital for it. So this is also some of the jurisdictions across the world have moved into that regime. But we are trying to develop our own unique India risk-based capital regime. The work is in significant progress has been made. The first qualitative impact study is already out. Insurance companies are looking at their own companies as to how the capital requirement will unfold. By the end of this year, we will be getting the results. If required, we will do the tweaking and some changes and maybe run another QIS. And again, and by as 2025, we wish to completely roll it out for the entire industry. So this is going to be another game changer. And the third one is, if the number of entities grow. So we are moving from a current, the approach is compliance-based supervision. From a compliance-based supervision, we are moving to a risk-based supervision, wherein it would encompass that every unit, every enterprise-wide risk management will be done by carrying out their, you look at the operational risk, you look at the liquidity risk, you look at the macroeconomic risk, you look at management risk, solvency risk. All of that will be captured real time through the reporting formats. We are working with a very credible organization called Toronto Center, who are actually helping us in building this capacity. The first pilots are out. Again, we hope that the RBSF framework will be in position by 2025. Next. And of course, the last point is that we are also facilitating the insurance companies by having a regulatory sandbox so that the insurtech and fintech players can come with new solutions, end-to-end solutions. They can be experimented in the actual real life by selling those products. And once it is tried and tested, then the approval will be given to mainstream the product. So this will foster more innovation, it will nurture growth, and more technology players will come into the system, help the insurance company in reducing the cost and providing a better experience to the customers. Next. So, and the last point which I would like to make is the UPI. I said the UPI-like moment for the insurance sector. So here we are talking of a platform or an electronic marketplace which we want to create. The insurance companies are all going to be the ones who will take this lead. They will be forming a company, and this company will be responsible for creating this protocol or this platform or this marketplace, the Bima Sugam, which will be a tech-enabled model, which will actually increase both penetration and also inclusion, and democratize and universalize insurance. This platform will enable to reach to each and every citizen, whether they are sitting in the last mile, 2,000, 5,000 kilometers in the most difficult hill areas or the farthest and remotest corner of the country. Through technology, through internet, this platform will be available to buy and sell, to service the request of the individual, and also to settle their claims. Next. And this will be done through a women-centric, the distribution, we propose to do it both physical as well as digital. The platform, all the transaction will happen. Physical solicitation will be done by a workforce called the Bima Wahak. Bima is actually insurance. That is the Hindi or the Indian word for Bima, for insurance. Vahak is the carrier or the distributor. So this woman will be from amongst the community. So she will understand the language, the region, the people. He will be familiar amongst the locals. So you have a trust that from the community somebody is coming and telling you. So we want to deploy through the insurance companies to begin with in this year at least one Bima Vahak in each of the Gram Panchayat, which is the smallest unit of administration in the country. And we hope to cover all the Gram Panchayats, which are 250,000 in number. So this will enable us to reach to the last mile and increase in insurance coverage. So this is something which the Bima Sugam will do in the first phase. Going forward, the Bima Sugam platform will be able to also take care of bigger ticket insurance products. And going forward in maybe the second phase, third phase, the entire spectrum of insurance products will get captured in the Bima Sugam. It will have the digital footprint of the customers. It can reach out to the customers within no time through SMS, emails. So this journey will become very interesting, very fast, and also accountable. So the Bima Sugam, we expect another big digital infrastructure, a digital electronic marketplace, which will be a game changer. And I'm happy to share that all the stakeholders are very keen that this be set up very soon. And we expect the first phase of operations in the next 12 to 18 months time. We don't want to hurry up. We want to build every aspect very safe, cyber security systems in place, the consent-based architecture, and try it out and then put it in the marketplace for buying and selling. Next. Next. So the base product I've already explained is the Bima Vistar, where we are basically saying it will be a parametric kind of insurance for life, for accident, for health, and a little bit of property. So that is for the bottom of the pyramid. Next. So this is the Vision 2047, where we are talking of leveraging data, and we are talking of complementing it with various kinds of technology. And at the same time, we are talking of the focus on the satisfaction of the policyholders and customers and protecting their interests. Next one, please. So this is the opportune time for tapping the insurance sector because of its potential, because of its power, because of the technology, because of the major drivers of growth, because of the growth of the economy. So Indian insurance market is there. As I said, 1/5 of the world population here in India. There's a market, there is a demand, there is a growth prospect is tremendous, and also commensurate returns which the investors will get. Next. So today, if you look at the foreign direct investment into this sector, almost all the major developed economies are there. Japan is also there, but there are only a few players. We would expect more players to come in or investors to come in. Next. So in India, we have the market growth demand. Japan has the expertise, experience, and the capital. So I think these two need to collaborate, and we have the synergies we've got to bring in. Next. So I would say that we would like to welcome you to join us in this exciting journey, optimism, openness, opportunities, and also help us in our vision and in our mission of having insurance for all before 2047. Thank you very much. I have taken a lot of time, but now I think we are open for the questions. Or before that, so let them have the questions. I think the companies will respond also. Or would you like to speak for two minutes each? So I'll invite Mr. Sharad Mathur, or I'll invite Mr. Who would like to come first? Mr. Bora. Yes. Aye.
So we actually have a presentation. So
you want to make a presentation?
Yes, it's designed like that. It's a 10-minute presentation of each.
Okay. So will that take too long?
No. Oh, I'm sorry. You're supposed to.
Thank you so much, sir. I think so. You really set the tone, and I think so. There would be more stuff to come along. Now, to understand the role of IRD and the impact of its policies, which have made their presence in the actual field, we have presentations from the CEOs of Japanese joint venture insurance companies, and who would like to share their experience of the Indian insurance sector, how they've actually worked it out in the market. So we have 3 life insurance, namely Max Life, Star Union Daiichi, and Reliance Nippon, and 3 general insurance companies, namely IFCO Tokio Marine, Universal Sompo, and Chola MS General Insurance Company. So we'll start with the life insurance companies. I would request Mr. Ashish Vora, who is the CEO of Reliance Nippon Life Insurance Company, to share his experience. Over to you, Ashish.
Konnichiwa. My knowledge of Japanese sort of begins and stops there, so I will do the rest of the presentation in English. Chairman sir, thank you for your words. Clearly, some of us who've been in the industry for a while are seeing a very different IRDA and are seeing a very different regulatory framework that has come about since Chairman Panda has taken over. And what I want to share in the next few minutes is not to repeat some of the things that have been shared about the country, about the regulatory drive, etc., but to share some experience as to how we've been doing over the last few years. Nippon Life's investment in India is approximately 11 years old now, but they took a 49% charge only about 6 years ago. So the fortunes or the outcomes of the company became really different, and I'm going to share some of those numbers with you. Next, please. Hi, this is just a broad description of where Nippon Life stands in the world. It's clearly the largest player in Japan. It operates 14 companies in 9 countries. So that's the expanse of Nippon Life's network across the world. Next, please. This is how the Indian operation stands. Some of the numbers really talk about what the scale is now. We manage a sum assured of a little over $10 billion. And I think just a little further to what Chairman Panda was saying, the whole dream about connecting India, about the network across various new vehicles is really about creating that last mile connectivity. Our company operates with a total branches of over 700. So we already have the first level of brick and mortar structure that is there. While in the life insurance industry, we've done a fair amount of work on digitization, etc., but really the selling is still face-to-face. That market is not changing in a large hurry. The general insurance experience has been very different, and some of my GI colleagues will talk about different things. However, a very important brickwork for us is the core branch network. So in a way of speaking, we already have the first level of network or pipeline laid out, which can be leveraged very well to deliver to the vision of insurance for all by 2047. Next, please. Sorry, this is... Well, I thought it was rule-based regulation. This one looks to be quite enforced. Okay, we'll come back. We'll fix our presentation and...
In the meantime, can we request Mr. Prashant?
Next slide, then we'll come back.
Prashant,
Good afternoon. Good afternoon, Chairman Panda, Ambassador George, Mr. Rajaman, my colleagues from the industry, and everybody gathered here. It is absolutely an honor to be amongst you. And I represent not just Max Life, but our shareholders, MSI, present here as well. Feel extremely proud to be amongst you. I think with an energetic presentation that Chairman Panda made, I am here to talk about 2 or 3 things. First, his pitch was about attractiveness of India as a country and as a company. So I'm just going to share the success story of Max Life Insurance over last decade, and I also share numbers of last 2 to 3 years, just to make it come alive, so that it's not just words. So firstly, I think I'm also waiting for my presentation. Hopefully it comes up. Yes, go to the first page, please. So this first, to give you a sense, Max Life Insurance is amongst of 5 life insurance companies, private life insurance companies in India. And while the company is about 23 years old, the investment that MSI made in Max Life is about 11 years old. And just to give you a sense of some numbers, ever since the investment that was made by MSI, the progress that we made. So value of new business CAGR of 25% for the decade, 25%. The total premium, gross premium, new premium, all growing between 14 to 15% on CAGR basis. If you look at AUM, growing at 28% CAGR for the last 10 years. If we were to look at overall infrastructure, people, offices, year-on-year robust growth. I'm here to just give you a proof point. Chairman Panda talked about return on equity. We have a return on equity of about 17-18% year-on-year if we look at last 10 years. If we look at return on embedded value, continuous, it's like a machine, 20% year-on-year. It just comes. And it's not just because we are a great company or we got an investment from Japan. And that's the attractiveness of the market. And I'm sure many of my colleagues sitting here, when they come here and share their stories, the numbers are going to be similar. And I just wanted to start by sharing with you that if you are not in India, you are missing this opportunity. It is not possible anywhere else. Just moving ahead, the role of the regulator, that's the second point that I just want to make. We have had our own journey, which was, not like straight simple. For the first 11 years, it was joint venture between Max of India and New York Life, which was a US company, and then they decided to move on in 2012. And their stake was bought over by MSI. And that's how MSI became our shareholders. If you look at the structure, right now, MSI, it held 26% in the company at a point of time, just to simplify the overall structure, decided to swap up and go to our holdco level. And across this journey, there were several approvals that were needed. First, to set up the company, then MSI buying from New York Life, then MSI trying to swap up, our own structure evolving. I can only say that the level of support that we got from the regulator was fantastic. Without their support, we wouldn't have evolved, structured our company in a manner that we have done just now. Chairman Panda talked a lot about how we operate, and I completely agree with Ashish. He shared that the way we work now with the regulator is very different from how we operated in past. I've been in the industry now for 17 years. Last 2 years have been very different. When we meet with the regulator, it is no longer a company versus regulator discussion. A lot many times it's like a team discussion. So we are not discussing breaches, we are not discussing compliances, we are discussing how to evolve, how to change, how to grow. Those are discussions that take place. Many a times CEOs have very difficult tasks to manage their numbers, because shareholders will give very steep targets. If you are in India, you're talking about 25% kind of number. You can imagine the business plan discussions are very difficult. All of us will have very steep targets. Guess what? That exercise doesn't get over there. There's a new target that comes from our esteemed chairman, which is maybe in many times higher than what the shareholders have asked. The point that I'm trying to make is the spirit of being in insurance in India is now some of the changes that got highlighted in the presentation that the chairman made. But just to make it come alive, every quarter there's a meeting that takes place. It's called Bima Manthan, where all the CEOs are invited. Bima Manthan means insurance brainstorming. And in those meetings, we actually think about how do we continuously make progress towards the vision that has been set out by the chairman about insurance for all. By the way, we never had a vision before the chairman came. There are discussions which are taking place all the time about how do we change the product, how do we make it easier. Many a times the discussion is also about what can we do more as a regulator to help aid the growth of the industry. And I think being in such a situation on behalf of the industry is a sheer privilege, because that's how the growth will come. And I can share with you, you saw all the numbers. Last year, for example, on new sales, we grew 18, which is higher than the decade number that I shared with you. This year, we are growing at about 26%, which is higher than last year. So by every passing year, I think the momentum is building, and that's true of the industry. Lastly, I will also like to highlight how we have worked with our partners, because you'll be interested in knowing, being investor, what's going to be your role, what kind of platform will you get. I can say with all humility that we have, and I have as CEO, enjoyed our relationship with MSI. Very fantastic set of people, not intervening, but very supportive, very, very supportive. Some of them are here. Thank you very much for all your support. If you look at the value add which I made, of course, in addition to investing, there have been strategic support in terms of evolution of the structure of the company, but in the corporate governance across a variety of things, be it policyholder protection or audit committee or investment committee or HR committee, there is representation from MSI. They have a voice, and that's how formally they engage with us, and we actually like it quite a lot. There hasn't been even a single instance where the company wanted to do something and MSI has come back saying, no, you don't do. There is always this innate support and trust with which MSI has operated. That's been a root cause of our growth, our success. There are participation on multiple forums beyond our board. So, we share best practices around distribution, around controls, around risk, around products, and their global experience actually comes very handy, and they're always so willing to share. They push us for innovation. So overall, feel quite blessed, A, for the opportunity that India is offering, B, that the regulator endorsement support that we are getting, and C, the Japanese investments that have come to India have really borne fruit for us. I just wanted to kind of call it out and A, thank all the stakeholders, the chairman and our shareholders. Thank you very much. I think we will continue to do very well. I think we're poised. Thank you very much.
Thank you, Prashant, for kind of sharing your thoughts on this. My sincere apologies for the last presentation. Ashish, it was just a mistake. We put up the other one. May I request you to kindly please come and complete your presentation. Thanks.
I'm back. It is said in India that life insurers have a lot to say. They don't finish quickly. So if you see a life insurer with 2 slides, surely something is wrong. He is not operating to character at all. Okay. Next, please. So this is Nippon Life's presence in India. They bought 26% stake in 2011 in our company, and then in 2016, it went up to 49%. Nippon Life also is in the asset management business and therefore has a 75% stake in NAM India. So this is their total operation in India. Next, please. Now we created a chart, we created a slide to say how does Nippon Life evaluate international exposures or international investments? Now, a large part of what has been discussed is India, its attractiveness, etc. We put it in a slightly different frame to say, what is their framework of evaluating where to put the money? And there is a real need. India provides, and a large part of the world, a large part of Asia provides population. Japan has a degrowing population, and there is therefore a need as to how the situation in the domestic market gets complemented by what can be offered by the rest of Asia. And that throws up a certain set of opportunities. There are a large number of countries to look at. And therefore, the framework to evaluate that has a few elements. It's about the macroeconomic background, which Chapman spoke a lot about. It's got growth of the life insurance industry in itself, the penetration and the population. It's got the regulatory landscape, ease of entry, flexibility. A lot has been spoken about. And I think some of this is very important because when we look at other markets like China or Indonesia or Thailand, which are equally attractive destinations from a population, penetration, density perspective. But when you look at the regulatory framework in some of those countries, and I've had the personal opportunity of dialoguing and evaluating and sort of assessing some of that, there is a marked difference between where India stands in terms of relevance of regulation and where some of the other countries stand. And we spoke about opportunities and availability of quality of talent. I think the fifth element is something that just needs to be emphasized. Chairman spoke about reaping the demographic dividend. In reality, what it means is availability of talent. And some of us who operate 700 branches still stand up and say, oh, we are not getting enough talent in the last quartile of our branches. But in real terms, when you compare this with, again, an Indonesia or a China, the availability of talent and English-speaking talent is a significant plus and a very large positive that is leveraged well by almost every international player. Next, please. I talked about it in my previous standing here, so I will not repeat that. Thank you. Here's the history of our performance since the investment went up to 49% in 2016. You can see the company has really grown. We used to manage an AUM of less than $2 billion. It's become double. We are now at about $4 billion. We've moved the persistency very significantly. So if you look at a list of parameters, you find almost all parameter has moved up very substantially. And you compare some of these numbers, they look like quite good health metrics, even when you compare with some of the developed markets. And on the left-hand side is the EV chart. Our North Star is to build embedded value. And what you see on the chart is that year on year, there is consistent growth of embedded value. And that's the true measure of what is being created in terms of returns to the foreign investor. Next, please. I think another important dimension to talk about is what is the cooperation level between the Japanese company and the Indian JV. And Prashant spoke very well about how the management system is not intrusive. It is truly collaborative. I have the same experience. There is not a single no that I have got. There have been suggestions, there have been alternatives. But at the end of the day, it has been my decision to do or not to do. So that empowerment is something that is wonderful, the way it happens. And I can clearly see the Japanese ecosystem works exceedingly well with the Indian ecosystem. And that fostering of trust is what has come across in my experience. The pictures out here is something that we borrowed from the Japanese company, the business model called Face-to-Face, which is the women-oriented distribution system. Now, India has a lot of opportunity. We have a lot of middle India that has educated women who do not work, and especially after marriage, etc., sort of stay at home. This model has really helped us, and this is technology that has been available with Nippon Life. We started the first branch of the women-only model in 2011. So it's been 11 years, 12 years now that we operate this model. We have 3,600 full-time women employed in 225 branches that are only women branches. When I look at this, it is one of the finest examples of how our country has benefited from a business model. The point I'm making is that it is much beyond of investment and returns and ROC and things like those. It's really cooperation to help India develop a model which hitherto didn't exist. So we are really thankful for that technology, work process, and expertise that came in and made the two countries work together very well. Next, please. I have three last points to make. We have about 7 expats from Japan that are based in India, and they are full-time employees of my company. That is the vehicle that sets up this cooperation, that sets up the whole dialogue process with the international company, and that is our doorway of being able to access even other countries where Nippon Life has an investment. So it is not just partnership, it is an operating system, it is a deployment of people that build highways and networks and roads for us to get access to product information, best practices, customer information from across the world, so that we are able to move faster. I think the second point really is about how investors could leverage India. Over years, it's been proven that India has taken quite a leading edge on digital and on technology. The other place where India has formed a leading edge is really management of data, building models, building predictive models, being able to build moving predictive models that is able to closely track and predict business performance. What we see in the Nippon Life world is that over the last few years, India has moved significantly forward as compared to other investment countries. The way I think about it now is that over the next 2 to 3 years, we are likely to form some kind of a partnership or some kind of a sharing model with other companies so that this strength of India gets leveraged by an Indonesia, a Thailand, a Malaysia, a Myanmar, and countries like those. The point I'm making is that we think of the opportunity as beyond investment and beyond partnership. It is to be able to create a hub using data and technology to be able to lead and teach other countries to help them grow faster. In a sense, we think of this as a 20, 30, 50-year journey. In the end, we will all be the developed world. There are some of us who are still developing, will get faster to develop. There will be others who will be a little slower. And we want to be that country to be able to help those countries develop faster, leveraging the two strengths that I spoke about. Lastly, I think Japanese companies, brands are extremely acceptable in India. Nippon Life is a very acceptable brand. There are so many others. And thanks to the automobile, investments, perhaps. But when you come to India, you find that it doesn't need a very large amount of effort, or it doesn't need a very large amount of pushing water up the wall to get acceptance to a Japanese brand. It's really quite there. And there are a large number of brands that already exist. And when you come in, it makes it's almost like home, because there are so many other brands that exist out there. Thank you so much for your time. Thank you so much for listening to me. And Randeep, thank you so much for getting my presentation up there.
Thank you, Ashish. I think so, sorry for that. Again, I'm just apologizing, but I think so it was lovely, you covered it up all well. So may I request Abhay to please come to this dais to share his thoughts.
Konnichiwa again. It is, should I say konbanwa? Maybe it is good evening to everybody. Heartfelt thanks to Honorable Ambassador CB George for giving us this platform to share the views. Chairman IRDA, thank you, sir, for coming down and creating this avenue.
Chairman IFSCA. I think it's very, I could learn so much from that GIFT City presentation. I think your understanding of so many nuances of financial services and how they can be brought together was completely, I would say, I also got overwhelmed when, being a finance professional, I thought I will understand, but you are kind of, bringing everything together, being a regulator, which is common to pension, insurance, capital markets, and, still able to manage things and make things happen there. I think there's a lot of things are happening in India, but they are not marketed well. They are not explained well. I think it was a great platform and you explained it so well. Before I go to my company, I would like to reiterate some of the points which Chairman Sir already covered. Chairman IRDA already mentioned. With its young population, growing education and income, India is one of the best markets in the world right now. It has been mentioned multiple times, but I just thought it needs that reiteration. It is truly a melting pot of cultures. People with an open mind, very good heart, they welcome different religions, different cultures, different philosophies, views, but yet they collaborate and they succeed together. And this is very unique to the country. They have very different divergent views, but people come together and they still make things happen. The country has a very stable and supportive government, providing one of the world's best digital and financial infrastructure, as we could see from the presentations. With stable prices, the GDP growing at more than 7%, the interest rates have also been very, very stable. Unlike many other countries, if you see US markets, the interest rates moved from 0.5% to 5.5%. It's a huge, it's like going there by 10 times. And some of the banks got collapsed because of that high volatility in the interest rate environment. But not that you don't see that in India. You see pretty stable interest rate environment. It definitely has one of the most robust banking and insurance sector to support the growth initiatives in this country. The insurance sector or the industry has done, much exceedingly well, I would say, if you see post-COVID scenario. So after COVID, the industry grew by like 22%. And the last financial year, it grew by 18%. We are expecting that this year, also the growth will be around 13-14%. So if you see the GDP growth around 7%, in the insurance industry growing at 14%, so it is like 2 times of the GDP. I think, it has happened, as some of our colleagues mentioned, the insurance sector has witnessed huge set of reforms under the present regulator. The meeting here and this event itself is testimony to the proactive efforts which have been taken by the regulator to enhance insurance penetration in the country. Definitive reforms have been made in area of products, services, capital, reinsurance. So it's a complete transformation from, as I think Chairman Sir already pointed out, focus was more on rule-based regulation. Now it is a principle-based regulation. Coming to SUD Life, I think, with very strong backing from our promoters, Dai-ichi Life, Bank of India and Union Bank of India, 2 of the leading banks in the country, Star Union Dai-ichi Life, or SUD Life as we like to call it, has consistently grown over the last 14 years, providing life cover to around 14 million customers. So we cover about 14 million people. SUD Life has grown rapidly and doubled its business over the last 2 years. The company has achieved profits in the 6th year of its operation. So it's very rare in insurance industry, you take a lot of time to break even, but we actually achieved profits in the first 6 years of our operation, and we have been consistently profitable thereafter. If you see the capital efficiency, I think it has been one of the most capital efficient companies. So whatever capital has been invested, the value currently will be about 14-15 times of that in the last 14-15 years. So a return of around 20% CAGR. Automating the processes, I think, this is something because the India stack is helping us. We are also trying to automate all the backend processes so that they become conducive and they can create that ease of onboarding which everybody wants. So, in 3 clicks or 4 clicks, can you buy insurance? Can the data be, very safeguarded so that, but if you want to access it at one single click, you can again access it. So it's like a job where you can, you are making it very secure, very safe, but ease of access is not compromised. I mean, that is made even more easier to kind of, get through when you want it. It has been an example of a very successful Indo-Japan partnership, I would say, between the two strongest banks in the country coming together with Daiichi Life to create a very strong franchise of SUD Life. This kind of collaboration has the potential to create global enterprises addressing human needs and aspirations. The world was already quite volatile. We heard, I think, from Chairman IFSCA, he mentioned that it has been a VUCA world, a very volatile, uncertain, complex, and ambiguous. After COVID, has become even more brittle or incomprehensible, a Bani world, as we now like to call it. The depleting resources, the environmental damage, they're all causing more difficulties, and insurance companies cannot stay away from this. We are in the middle of that. We are supposed to manage the risk, secure and protect lives. I think the development efforts which we are putting as a group has been led ably by Daiichi. A lot of resources we get from Daiichi in terms of risk management, in terms of capabilities on technology, in terms of capability in financial and capital reinsurance. So this kind of collaboration where, the experience of more than 120 years which Daiichi Life has been brought to us. And I think, the distribution strength which our banks have, these two together has created a winning combination. And I think there are opportunity for much more in India. We are also pushing for very high growth. I look forward to many more, companies coming, many more people getting together, because this has been a successful partnership. And I just thought I will share as an example that, if two like-minded individuals come together with different skills. I mean, in India, if you see, there's a huge, as I mentioned, there's a young population of, which is like less than, the average age is around 28 years. And if a very talented population, and not only the English speaking is very, very good, but the software skills are very high. And combine that with the risk understanding in Japan, the hardware skills in Japan, the technology which is available here, and the capital, this can create a real powerful winning combination. And as Ashish mentioned, it can be for the whole world. I think, that's all from my side. Wishing you all the very best. And I think we'll be open for questions on the live side. Thank you.
Thank you, Abhay, for giving your perspective as to how the partnership has worked. So from life insurance, we'll move to general insurance. So may I invite Mr. Sharad Mathur from Universal Sompo to share his experiences? So someone is putting up the present. Yeah. Good evening, everyone. It's a great pleasure to be here in Japan, and it adds to our pleasure when we see such a great interest. And I'm equally thankful to you for taking time out and listening to all of us. The way regulation in our country is evolving, the growth that our country is witnessing in the economic side as well as insurance business, and which is attracting a lot of investment as well as interest of Japanese investors who are already invested in our country. So I'll just try to talk relating to how Sompo Japan, the company which I'm representing, the in commercial interest, investment interest, business interest of Sompo Japan in India business, how they view each of these elements: regulatory, which is becoming more developer than rule-based, than mere regulations, and also each economic parameter. So that will give a very fine visibility and would help me also to set a great perspective from investment angle. So just to share about the organization, it's a joint venture of Sompo Japan in India and companies known as Universal Sompo General Insurance. So other great Indian investors, which is comprising of public sector banks, 2 public sector banks, 1 private sector bank, and 1 fast-moving consumer goods company, and Sompo Japan, which is the only insurer among all 5 shareholders,
got together and formed this joint venture. So which also reflects, again, from investment viewpoint, that if there is one insurer, there are banks, public, private, and also consumer goods company, which are able to place interest in each other and in insurance business and in regulations, and now investing more to grow business, leveraging the developmental aspect of current regulatory regime. So there are 150 offices, which are brick and mortar offices, and representation through digitally enabled resources in additional 200 cities. So when we talk about growth, we are also talking about and also seeing how easy it has become to expand. May not be necessary to invest in brick and mortar or real estate, but also in digital, which is like capital expenditure, which is an asset in the balance sheet, and human resources, which again, act more as an asset rather than an expense. There are 233 products. It has become very easy now, from rule-based, where insurance companies used to file any product they wanted to sell with the regulator for them to review, approve, and then they could get an opportunity to sell. So Sompo, as an insurer, besides our other Indian shareholders, are very excited seeing the principle-based regime currently, where whatever innovations we are getting into in terms of doing a lot of freely customer surveys, getting lots of ideas, getting acclimatized with the kind of requirements customers have, whether in urban, semi-urban, and in rural pockets of our country, and very easily using these products and then filing. So it has been a great support in terms of not only innovation, digitizing our products, but also to reach closer to the customers, to sell, to offer them what actually they need. It is AA plus rated insurer, and great place to work certification. So which again adds to the euphoria of my senior colleagues in Japan, those who evaluate to increase investment in India, that whatever is being done and whatever possible to do, whether it is being testified through external agencies like Moody's Investor Company, which has rated this insurance company as AA+. Yeah, next please. So how these 5 shareholders, as I was sharing, leveraging each other's strength as Sompo, which operates in about 28 countries, we are able to bring back the global expertise, products, how to digitize customer acquisition to customer servicing to internal financial management, and bank branch network, which is close to 10,000, which say 60% of them are situated in rural pockets, hinterland, which Sompo, being a global insurer, might initially was finding it difficult how to operate an Indian market, which is having 1.4 billion population, or how to reach out to hinterland. So is being made easy by the strength that 2 public sector banks have and private sector bank. Now, Dabur, which is the consumer goods company, is a very well-known brand, very well-known household brand, as opposed to insurers. I think in Japan also, whether it's Vicks VapoRub of Procter & Gamble or Unilever, household products are more known in households than insurance brands. So leveraging on Dabur, it again becomes easy for Indian household potential customers, existing customers, to relate more with Sompo insurance brand. Yeah, next please. So these are financials. If we look at this 20% growth in gross direct premium has been made possible with the whatever we have been hearing through our chairman of regulatory body. I'll say that more than a regulator, our regulator has become a developer and enabling, facilitating this growth. And we are grateful and sure that we will going to see much more in terms of development of this entire sector. We can see from the investor's perspective, we see return on equity is close to growing close to 14% for our insurance company. We can see combined operating ratios are turning better. We can see underwriting profitability. We can see PAT, which is rising. So these are some of the critical financial parameters where we are seeing growth. We are seeing very bright unfolding financial parameters. It's not that only top line, but also bottom line, where any investor would have equal focus. So next, please. So again, how internally we discuss, or yesterday when all our decision makers in Sompo's headquarters, we were just thinking that how to increase business. It is not about one pie and any new insurer comes in, or even the existing ones, who would eat from within the same pie. So we were just discussing that how to extend the pie, because penetration, I'll just cover in my subsequent slide, still is not that great as opposed to our global peers. A lot of potential, a lot of work to be done by us. So in terms of regulations, it has become very easy. Regulator is focusing on these three parameters: availability, accessibility, and affordability. And this is what is making us think that we should also get completely aligned with these three key objectives. This will enable us to construct those kind of products, to have that kind of distribution network, to support that growth, to have required compliance and strong governance framework in place with a very solid and robust underwriting and risk models. Yeah, next, please. So how we see same very, very critical, because you would see that most of it is getting repeated. And it is getting repeated because it has happened for the first time. It has happened after a very, very long time in our country, where we are seeing regulation getting converted into the developmental thing more. So we have seen consultative approach, as it was also mentioned by one of my colleagues here. Every 3 months, once a quarter, we in regulatory head office, all insurance company CEOs get together. And when we say principle-based, we all collectively discuss, deliberate that when we talk about growth, what all to be done, what all products, how to make customer servicing much better, how to make sure that policyholders' interest remains protected, how to see that bottom line, top line, financial parameters, customer centricity, digitization, technological advancement, how to do penetration in areas where it is still under penetrated or we could not reach so far. So that is helping us to collectively make sure that our sector grows. Then ease of doing business, like so many regulation circulars have been repealed, reduced minimum capital for reinsurers. It has been brought down to 6 million from 12 million what it used to be, so that more and more reinsurers also can set up their branches and can support insurance growth, can also have growth in their top and bottom lines in their balance sheets. So expense of management has been made very flexible, so to say, that, I'll just cite an example. For general insurers, it is 30% of GWP can be the expense, which is comprising of business regular operational expenses to commission, distribution commissions. So I can, as insurer, decide I want to pay X percentage to my distributor, or I want to incur X percentage expense on salaries of my employees or my brick and mortar office rentals and so on. So that is bringing a lot of flexibility in the whole thing. Then amendment and intermediaries, so opening of distribution network. So like bank, even if it is not a investor in insurance company, but still can have now 9 non-life insurers or 9 health insurers or 9 life insurers as distribution partners. So which means giving a wide choice to its customers and making it very easy for bank staff to sell if one product doesn't click or doesn't suit with customer requirements. So there are so many other products of so many other insurers as they have empaneled with. So this is like, opening up distribution architecture. Next, please. So these are, again, we are betting very high, and I, in my individual capacity, can bet my bottom dollar on this. When I say that India, 1.4 billion population, and we have rural hinterland, which is under-penetrated, because urban, semi-urban, it's very easy for anyone, even for Indian investors or any foreign investor for that matter, Japanese or any nationality. but getting into hinterland is very difficult, even for entities which are headquartered in India. So this Bima Vista, Bima Vahak, Bima Sugam, as we say, especially women distribution network, which we are trying to tap women in rural pockets, would going to make it easy to distribute insurance products in those pockets where it has been a little difficult logistically until now. And Bima Sugam, which is like digital framework, one of its kind, at least I haven't heard so far, even in the most matured markets in the Europe, in the US, anything of this sort, where end-to-end customer acquisition to customer servicing, claim settlement, policy issuance would be made possible. So this is something which would going to make Indian market very, very unique, Indian market very, very big, Indian market very, very attractive for any investor, because it is going to bring lots of accuracy, it is going to bring lots of digitization, it is going to bring lot of control, great level of compliance. Otherwise, it is not possible to manage business comprising of potential 1.40 billion customer base. Risk-based capital, IFRS will going to make this colossal opportunity very conducive for any foreign investor, because internationally, as we operate in IFRS regime, we operate in risk-based solvency regime, would going to even make it commercially conducive for any potential foreign investor. So our even Japanese investors, Sompo, were very Sompo International, which is headquartered in the US, even people from the US were there yesterday. So they are able to relate with IFRS. They are able to relate with the most unique digital experience, where entire customer acquisition, customer servicing, everything can be managed by customers end to end. And we are not doing any disintermediation. We welcome all intermediaries from broking community to our agent partners fraternity. So it is all inclusive. So this is what is making India one of its kind opportunity. And this presentation, which I'm making you today, I made it yesterday to my existing investors to increase their stake. They increased from 26% to 34% some time back. Now they are exploring to increase it further to 51%. So this is the beauty of growth. This is the beauty of making it at par or better than global standards. And we have seen that Indian insurer tax accounts for 6% already of total global funding. So which again is a testimony to what tech innovations in insurance sector taking place already. Yeah, next please. So this slide is about potential. Our penetration is 4.2%. And if you see, our market size is 0.13 trillion. This is about non-life insurance, which is about 0.78, 0.80% of total global market size. And density, so this is to show comparison on the potential base and where we are and where we can go vis-a-vis potential that we have. So we have scratched the surface. There is a lot more to be done. Our foreign investors already who are present in India have experienced and added to their excitement. We are seeing investments coming in from them, and we would be very, very delighted if we can have investment from additional private equity VCs and institutional investors. And many of your colleagues may not be able to make themselves present here. So only request from our side is that, spread the word, the kind of opportunity that exists in India today in terms of digitization, in terms of global accounting procedures that we are going to introduce in the process already. We have started executing. So that would going to be very, very conducive for any investor for that matter, whether it's Japan or anyone. And yeah, next please. I think yeah. So we can see again it is about potential strong middle class, urban population, per capita GDP. So these things are again a testament to what I was trying to say: potential and opportunity that we have, and where we are, that gap. So collectively, we need to bridge, and rapidly, as market is growing rapidly, economy is growing rapidly, fastest growing economy, around 7%, and poised to be third largest after the US and China. So it adds to my excitement as Indian, as also a representative of Sompo Japan Investment in India. Yeah, next, please. So the last one, you see the potential where we are and where we can go. With this, I'll close my views, and again thankful to our insurance regulator, grateful to our honorable ambassador here and entire High Commission, and all of you for taking time out and listening to our views, our experience from the investment perspective more. So thank you so much. Looking forward to meeting you and seeing you in India. Thank you.
Thank you, Sharath. I think so that was quite exhaustive and quite detailed. I would now invite Mr. H.O. Suri to share his thoughts on the Indian market.
Good evening, everyone. Most of the points have already been covered by the Honorable Chairman and my colleagues, but still I wanted to express my views from my point of view and what has been happening in India and what are the scope in the future. Basically, India is currently one of the fastest growing economy in the world, which is striving to make insurance sector transparent and insurance friendly. India has emerged as the second largest insurtech market in Asia Pacific region, growing at the rate of 40%. And it's also the third largest automobile hub in India. Now, there has been a huge push or the support from the government of India for the infrastructure development, whether it's a railway, transport, and all those things. This gives an impetus to insurance industry to develop and to grow more business for the years to come now. It offers a vast growing market for all type of insurance products today, because of the market has evolved over for last 2-3 years with the latest changes made by the regulator, making it an attractive destination for the foreign investment, particularly for our value partners in Japan. Insurance market in India is expected to grow by $222 billion by 2026, which is expected to grow by another $600 billion by 2030. This is, based on the expected growth of 15%. India has raised the FID limit from 49 to 74%, where all the, companies have taken this benefit out of that also. And it is a testament to the India government commitment to welcoming foreign capital and expertise in this sector. India has implemented robust regulatory measures to ensure safety and security of the investment, particularly of the foreign investment, and IRDAI has ensured a level playing field for all the players in India now. Insurance industry is moving towards the more liberalized regime. Recent regulation of use and file, ease of doing business, payment of commission, these all that have been covered, but I'm just touching upon towards the same. More flexibility in managing the expenses, removal of common commission caps, and supporting regulation on ease of doing business will foster the product innovation. IRDAI has also shifted the principle-based regulation from rule-based regulation by not micromanaging the expenses of each company, and it has actively been reducing the compliance burden to ensure companies to better focus on the development of the products and improve their coverage of penetration. A robust risk-based capital and supervision framework would mean that the extent of capital required and intensity of supervision would vary depending on the risk undertaken by each and every company. Now, recently, the improvement in the loss ratio is engaged with the better fraud analytics, better use of industry data, common platform for customer experience via Bima Sugam, and its rising yield on the investment will favor the profitability. Under this insurance for all by 2047, as envisaged by the regulator, IRDAI, and by the government of India, a comprehensive product that covers all life, health, property is proposed to be launched. The distribution strategy would deploy human workforce at village level. A one-stop shop platform is under development, and that will bring insurers and distribution together. The primary aim of a unified platform is to provide a single convenient portal to customers for simplifying policy purchases, claim settlement, and service requirement. There's a thrust to increase the penetration of insurance into the rural area, particularly to Tier 3, Tier 2, and the rural populace. This will certainly provide volume spread across the country and avenues for the insurers to balance their portfolio. To foster healthy competition, IRDAI discontinued the exclusive distribution arrangement between the insurance and corporate agent, permitting to later to distribute the product under the open architecture system. Life Insurance and General Insurance Council are also looking at the collaboration possibility with the National Health Authority to onboard and service customers in a better manner. With the improved thrust on the digitalization and adoption of smartphone, high-speed internet connectivity, customer experience like e-insurance, e-signatures are being adopted. IRDAI has issued detailed guidance on related cybersecurity and data privacy parameter also. The adoption of digital technology and data analytical artificial intelligence in insurance industry is growing rapidly, improving efficiency and customer experience by understanding the customer requirement and offering customized solutions. Foreign investors, especially from Japan, known for their technological prowess, can play a vital role in the transformation. Collaboration in this space could revolutionize the way the insurance is delivered, making it more accessible, efficient, and customer-centric. Recently, new initiatives have been taken by the Government of India to strengthen the domestic insurance market in India by setting up a separate exclusive hub at this is GIFT Center at Ahmedabad. This would be of particular interest to Japanese companies with expertise in insurance to explore their involvement and catch the opportunity. There are also opportunities of mergers and acquisition in India, inviting foreign companies to expand their presence in India now. IRDAI vision of insurance for all by 2047 primarily aims to make the insurance process in India hassle-free. By efficiently collaborating with the general insurance and life insurance companies, the scheme also aims to create a robust claim settlement mechanism and reshape the national insurance sector to make it globally attractive. The Indian insurance industry stands at a crucial juncture, witnessing a sustainable growth of nearly 15%, providing steady returns to the investor and stakeholder. This growth would be augmented by the aforesaid regulatory and government initiatives and industry measures with the aid of technological development across the insurance value chain. The ambitious target of doubling the insurance by 2027 by IRDAI is a welcome change to the industry to bridge insurance gap across all lines of business by means of innovative, customized products, technically prudent and technologically and advanced underwriting practices by plugging fraud leakages using robust data and analytics. Thank you for your attention, but I would like to conclude by inviting the Japanese business community to explore and invest in our evolving insurance sector. Together, we can foster a thriving insurance industry and benefit with the positive impact of the economy of both the countries. Before I end up, I just want to share my experience about our joint venture with Tokio Marine. I mean, we are the first one who have entered into the joint venture in the year 2000 itself. So 23 years, I've yet to see such a beautiful collaboration where we have not faced even a single incident. I mean, there have been a total collaboration as and when we require the capital, those have been infused. This company has been into profit from the day one, the first year. When we started our operation, we started with a GWP of 4 crores. Today, last year, we have crossed 10,044 crores. That shows the opportunity, that shows that there is ample opportunity of growth in India, For India, I can personally feel that there's no end of growth, provided you yourself come and see and analyze. But for last 2 years, the way the things have been evolved and the changes have been made, I think there's no end for the growth. And we have got almost more than 200 offices pan-India, and we have been sharing all sorts of technological knowledge with our value partner, Tokio Marine, and we are fostering ahead, in making this thing, and this is the testament when a company get into existence and it is into profit from the day one until that it is prospering. I think India is a very hot destination, and particularly for our Japanese partner, those presence have already been there, that this is a golden opportunity to come and see and invest in Indian insurance sector. Thank you very much.
So we come to the last of the experience sharing sessions, and I would invite Mr. V. Suranarayan from Chola MS to share his thoughts.
Good evening. It's indeed an honor to stand before you and present yet another success story of an Indo-Japanese joint venture business in India. Next, please. See, this company, Chola MS, is a joint venture between two 100-year-old organizations. The MSI, which is a 123-year-old corporate entity, itself coming together by several layers of mergers and acquisitions, and the Murugappa Group, which is a very large group in the southern part of the country with a vintage of over 100 years. We are primarily a retail focused player. Over the last, since COVID, 10 quarters, we've been punching higher than an industry growth. Last year, we had a growth of about 27%, and in the first half of this year, going at over 30%, which has meant that our market share in a fragmented industry has gone up to about 3% now. We are dominant in certain lines. In motor, we have a 5.5% market share, and in our overall composition, we are well placed in health accident as well as the commercial lines, and we've re-entered the agri crop insurance business as well. We are present in almost all prefectures in the Indian subcontinent, and our business mix also has a healthy distribution mix. We get about 30% of our business from bank assurance tie-ups. We have diverse tie-ups with government-owned banks, private banks, small banks, all of them. About 23% from the agency business. We have over 50,000 agents who work with us. And in the motor space, we work with almost all the Japanese as well as the other Indian and US-based OEM manufacturers. More importantly, we keep our investors happy with a return on equity of over 14%. And we are one of 2 or 3 companies which has over 80% of its net worth coming from profits that have been plowed back into the business. Both our partners haven't taken any dividend from the company, plowed back all of the profits over the last 20 years back into the business. And that is what means that we have a very solid equity base, which has got reinvested again and again into the business. We have a investment book which is about 283 billion yen, and this year we should be having a top line of something around 138 billion yen. Next, please. The essence of the success of this joint venture has been the high level of trust and transparency between the joint venture partners, to the extent that we are proud to state that we are the 3rd largest entity within the MSI framework. MSI operates in 43 countries. We are the 3rd largest after Japan and UK, which also does reinsurance business. So it's a credit. And we have about 6 to 7 Japanese working in India, not just in the corporate office, but also in other markets, larger markets. They help us in the product development space, give us the policy wordings, share the experiences that they have had in other countries, and then support us in the choice of reinsurers, give us reinsurance support. And more importantly, MSI operates digital hubs, global digital hubs in 6 places across the globe. And we have been privileged to have inputs from these digital hubs, some of which we have put into operations for efficiency in our scale of operations. MSI also advises on risk selection, risk advisory for the not just us, but also for the corporates that we deal with, in how they can mitigate the risk, which ultimately means premium optimization or cost optimization for our corporate customers. Next, please. So this is briefly touched upon, but the point that I want to highlight is that ever since the sector was opened up 23 years back, the private sector has taken control of the market, and today about 67% of the entire market is with the private sector in the non-life space. And as more players come into the sector, this is only poised to grow and further enhance the share of the private sector. Next, please. See, this is a point which is perhaps not been touched by the previous speakers, and which is what I would like to do. See, the sector got opened up in the country 20 years back, 23 years back to be precise. In this 23 years, India has seen every possible event. We have had an earthquake, we have had a tsunami. With a long coastline of over 7,000 kilometers, we have typhoons and cyclones visiting us quite frequently. We have had other floods and inundations. We have survived a massive pandemic in which companies paid out huge amounts of claims, which all means is that the trust quotient of the buying public has gone up significantly in insurance. Insurance is a trust product, and we need the insurers who build that trust and pay claims, and that's precisely what the industry has done. So this is one element which is a strong point. It's our duty, and there we should say that the regulator has ensured that there are sufficient checks and balances within the industry, the operating framework, which has meant that the customer grievances are in check, and therefore a very solid platform of financial solidity is being provided with a high stability is there. So that comfort is necessary, and I believe that in the 23 years since the sector got opened up, this has been well established in the minds of the Indian public, and as growth comes in, this will only rebound. Next, please. I'm not going to repeat many of the points that have been discussed earlier, but all that I would like to say is that there is significant underpenetration in the market. The market in India still revolves more around the metros and the urban markets. The tier 2 is moderately penetrated. The tier 3 is very lowly penetrated, and India still lives in its villages. And as this goes up, we find that the opportunity for penetration is quite significant. Chairman talked about all the digital India stack and the further emerging digital opportunities that are there and the penetration that is going to come in. These two, combined with a very conducive regulatory environment which is prevalent in terms of the shift of balance to development rather than regulation, and many other, the end-to-end digitization that is getting talked about, means that India is a good place for all of you to be in. Next, please. What regulator has been trying to do is make multiple shifts. One is at a business model, one is at a distribution level, and one is at a product and process level. These three shifts, fundamental basic shifts, combine. I'm not getting into the details. Some of them have been talked before, and in the interest of time, I'm not getting into that. But all three are essential. Business models need to change. The enablement has been brought about. Distribution in its multiple forms, whether it is organized, open architecture in bancassurance, or in agency, or digital, and ultimately in the product and process. All of this has come about, and which means that India is a good place for you people to invest in. We are a standing testimony. Welcome you to India. Please invest and also take your high returns. Before I end, I would like to request my colleague to say a few words in Japanese.
Thank you, Suri-san. I'm Naoki Takeda, secondly from Mitsui Sumitomo Insurance. I'm now working at Cholamandalam MS General Insurance in Chennai. I'd like to make a short comment, but please allow me to speak in Japanese because most of the participants is Japanese people. 三井住友海上はですね、さっき杉社長の方から話もありました通り、2003年にですね、インドのローカルパートナーであるムルガッパグループとジョイントベンチャーを設立しまして、2016年にですね、当時外出資規制が緩和されたと同時にですね、出資割合を26%から40%に引き上げています。それ以降、三井住友海上として、このジョイントベンチャービジネスに、へのですね、関与度を深めていったと。で、今日に至っているという、状況です。で、具体的に言いますと、例えば、そうですね、具体的な例で言いますとですね、言えることはですね、外資パートナーとしてできることは、三井住友海上の、日本だけじゃなくて、海外のグループが持っている知見とか、ノウハウをシェアリングするということに尽きるかと思います。で端的な例で言うと、一つは車両保険事故における AI 査定の導入というのがあります。AI 査定の導入というのは、要は車両事故が起こると、従来は整備工場にアジャスターと呼ばれる、専門技術を持つ人が、修理、損傷を受けた車を見に行って、で、損害額を査定するということを、やってたんですけども、やってるわけなんですけども、整備工場から送られてくる動画を見て、損傷した車の動画を見て、AI が見積もりを査定する、見積もりを作ると。損害額を査定すると。こういう、技術ですね。これを導入、しました。でこの導入にあたってはですね、三井住友海上の、さっき、杉社長も言ってましたけれども、グローバルデジタルハブの中の一つでですね、MS&AD ベンチャーズという、グループ会社がシリコンバレーにいまして、そこの仲介で、その専門技術を持っているスタートアップと出会ったことで、今日のその AI 査定の導入の実現につながったというのがあります。こうした事例のみならずですね、日本国内外で、グループとして培ったテクノロジーを活用したリスクソリューション、これをインドでも活用、展開することでですね、インドのその保険インクルージョンの一層の推進であるとか、あるいは新しいビジネスを作っていくといった活動を通じて、今後もこのチョラ MS というジョイントベンチャーの成長に貢献していくことができるんじゃないかというふうに確信をしております。はい。That's all from me. Thank you.
Thank you very much.
Thank you so much, Mr. Surya and Mr. Takeda. I think so. That rounds up our presentation sessions. I think so. The next would be the Q&A session, where I would request Chairman Sir, Mr. Panda, to kindly come to the dais. Kindly just give us 2 minutes, sir. We're just putting a chair actually, and we would then open the house for questions, and the interactions that you may like to have with Chairman Sir. Sir, may I request you to kindly come to the dais, sir? So for the benefit, people who may like to question you in Japanese, we have this device which will translate a question posed in Japanese to English. Ladies and gentlemen, I think so now the floor is open for the questions, and Chairman Sir is, will be very happy and delighted to take your questions. If you can just raise your hand and then identify yourself, and then you can please ask the question to Chairman Sir. Anybody? No questions? Yeah. If you could please identify yourself and.
My name is Fumio Uesugi from Tech Insurance Company, Insurance Broker. I have one question about captive insurance company. I read an article from Captive Review in 2022 that Indian authorities is now considering to open the private.
Okay, sorry. So the Indian authority, IRDAI, or the GIFT, Gujarat International Financial Tech City, is open up their facility to invite the corporate, other than the insurance company, to set up a captive insurance company in Gujarat. And do you the article says that you are inviting the domestic companies to set up a captive insurance companies in Gujarat. But do you think that the foreign companies can also set up a captive insurance company in Gujarat or not?
I think so. He's left. Mr. Trivedi from Gift City. No, he's gone.
Hello. Captives are concerned. You see, when I made my presentation, I spoke about certain changes in the statute. Currently, the statute doesn't allow you, as I said, like for example, captives. There's no clear mention whether we can allow the captives or not. So therefore, some amendments are being proposed. And once the amendment to the acts happen, then we are also talking of composite license, so that those insurance companies who have a life, health, or a non-life company, they could even also operate through a composite license if they so desire. So all those enabling provisions will come once the statute gets amended. And that is the request which has gone to the government, and the government is considering. So it'll take a bit of time to get that clarification. I think we'll have to wait a little while.
Insurance company that is set up.
Captive, there is no, as on date, there is no problem in my insurance that fully applied to this area also. So we both have discussed, we both have proposed to the government, and government is very positively disposed on that proposal. It is just a matter of time. Principally, they have agreed to bring in that, and we are hoping that whenever this next amendment takes place, so this will be enabled in the act.
Yeah. Any other question, please? Yeah. If you can please identify yourself.
Hi, I'm Vivek. I'm from Mitsui Sumitomo Insurance here in Tokyo. I studied in India, so in terms of a question on talent and acquiring talent, bringing into the insurance industry, because at least most of my colleagues, most of my, when I studied, they were more interested in the banking, finance, and other sectors. But how is just in terms of like attracting into the insurance, especially say underwriting or developing those skills? How is this? How are you? As an example, is IRDA looking to collaborate more with universities specializing, to bring in this kind of talent? This is my question on that.
I think we got 4 academic and research institutions dedicated for the growth and development of the sector. So in Hyderabad alone, where we are headquartered, we have an institute called the Insurance Institute for Risk Management. So apart from the general management, they also teach specialized courses in risk management and insurance management. And many of them actually get the placement right from the campus in the space of financial services, be it banking, insurance, or the markets. So that's one stream. And then there are 3 other institutions also. The National Insurance of Academy, which is in Pune, and then you have an Insurance Institute of India at Mumbai. So we have institutions supporting that. And I think going forward also we find a lot of other management schools, both in the public and private sector, who also offer some courses in insurance. And we've been asking the industry also to put forth their requirement as to what kind of courses we have to run. So our dedicated institution can cater to those requirements. So I think the entire landscape in terms of the skill set, the domain expertise requirement is evolving. And I think we are geared up to match up with the requirements of the industry. Thank you.
Next. Yeah, please.
Hello, good afternoon. My name is Eisuke Kawano. I'm from Foresight Risk Management Company. We're a risk management consulting and captive insurance company, consulting company. I just have a question again in relation to captives, but from a different angle. Chairman, you spoke about reinsurance in one of your presentations, and there are some captive insurance companies owned by Japanese companies. For example, a manufacturing company in Japan has a captive insurance company in another country, let's say United States. Some of them are rated by credit rating agencies. My question is, would such captive insurance companies who are operating as reinsurance companies in other countries, would these be accepted as reinsurance companies to assume risk from India on an as a reinsurance basis?
See, if they are coming as an investor, and what kind of business they would like to undertake, whether they want to come as a reinsurance company or become a life insurer or a non-life insurer, will have to be seen. So they can come as an investor. So they put their money, and in what shape and form they'll come, that shareholding structure, etc., will have to be seen. And this money will come, or this equity will come in the form of an FDI. So currently, the sector allows up to 74% FDI can come into an entity. So they will also have to find a partner from India. And as I made in my presentation, those channels have also been opened up pretty much. So should not be difficult to really find a credible partner. So I think whosoever you are referring to will have to actually come up with a firm proposal so that we will be able to guide them and take this initiative forward if they so desire.
Thank you very much.
Anyone else? Or Otherwise, we can close today's meeting. I think I'd like to thank the first and foremost the Embassy of India here in Japan, the ambassador and our colleagues, especially the First Secretary, Mr. Suresh, for providing us this auditorium and also providing all the logistic support. I think we had a fantastic interaction with some of our already existing players in India and also some who are interested or looking at the growth and prospects of the Indian market and would be taking decisions to invest, maybe if not tomorrow, maybe at a later date. I would like to assure each one of you that from the regulatory perspective, we are completely open to good ideas, good suggestions, which will take the sector forward. So any of you, if you have any query, we are leaving behind our email IDs. So you can write to us, you can address us. If you have a query, you have a suggestion, or you have a firm proposal. I would like to thank the insurance promoters from India who have already present in India and doing very well for really also trying to enhance your equity in those companies and also having a very robust business plan to expand and also to enhance the penetration and the insurance density. So I would like to thank our CEOs who have taken the time out and the trouble to fly. And I think they have made a very brilliant presentation in terms of their experience with the foreign partner and how reliable the Japanese partners are in terms of their support and also bringing in the best practices and their strengths are being leveraged also to enhance insurance penetration in India. So I'd like to thank the chairman IFSCA for also spending a great deal of time with us. He had to go for some other meeting, but he has brought out a perspective on what the International Financial Services Center could do. The regulations are at par with the best in the world or aligned with the international standards, and all the domestic regulators are also offering full support so that India going forward becomes a future for reinsurance or a hub for aviation industry, so on and so forth. So great prospects, great time to be in, and we are all proud to be Indians and offering solutions to the rest of the world. But yes, we need investments at this point of time, and because of the size of the population, also we need more expertise, we need more talent, we need more people to come from different parts of the world to help us in this journey of taking the insurance sector forward. Thank you very much for all your time, and have a nice day. Thank you once again. Arigato gozaimasu. Arigato gozaimasu.
Thank you, sir. So gentlemen, please you can join us for tea. There are some snacks. Please have an evening, and happy Diwali to all of you.
会場の外に軽食スナックがございますので、皆様ぜひネットワーキングセッションでお楽しみくださいませ。